no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now today we have an exhilarating lineup of segments to give you all as much information as quickly as possible as we normally do right here on this program. Now we have some live trading and market analysis like we like to do between now and around 9:45ish as per usual, but today is one of my favorite segments and one of yours as well, the dumpster dive, my Raccoon Trades. I found two stocks that you may have known or may have known in the past that are actually showing a lot of promise right now, even though they're down in the dumps, they're in the gutter, they're in the stock market pits of hell. And I've dug them up for you because they could offer very interesting, balanced risk opportunities. So, you might want to stick around for that. Those are names that I personally have not entered yet, but I look to enter in the very near future. So, if that's something you have an interest in, make sure you stick around. We'll be doing that around 9:45, 10 o'clock today. Now, yesterday, interesting day. We looking back at the market yesterday. Let's go to the 5-minute chart. Sold off a little bit and then kind of just slowly moseyed our way on up. Oops, sorry, wrong day. There we go. Sold off a little bit, then moseyed our way on up. Now we're just kind of farting around up here. Now we did have Google and Tesla earnings overnight. Google's up a little bit off the reaction off earnings, and conversely, Tesla is down off the reaction off their earnings. So a little bit of a mix there if we're looking at the Mag 6, as I like to call them. Mixed bag. So as the effect on the market is not very much of an effect. We're just kind of flat. So we'll see where today goes. Now with that being said, we're opening or looking to open around an all-time high or around that same area from yesterday's all-time high, which I should mark out. And as I keep telling you guys, as we move higher and higher and higher, you're going to want to mark out these all-time highs as we get them. Just especially if you're a day trader, because there are going to be areas that you would want to keep on your radar as time goes on. Looking at the rest of the market so far in the pre-market, and we'll get to our catalyst watch here in a moment here. Nvidia's pretty flat, but up a little bit here in the pre-market, up about 1%, so not awful. Nice little rebound off of that gap fill that we spoke about 2 days ago. Looking like we're going to get another push here, hopefully in the near future, so it's looking pretty decent. Microsoft had a decent little rebound yesterday, not out of the woods here, especially around this 505 area. I'd be very cautious. Full transparency, I am short Microsoft via a put credit spread. I'm sorry, a call credit spread. I'm short on Microsoft at the moment. Google we just talked about with earnings. Apple pretty flat. Heading into earnings on the 31st, which I believe is, yes, 1 week from now, on next Thursday. We already talked about Tesla. And Amazon. Bezos is selling more of his Amazon, so be careful on that. But still green in the pre-market here, so not too shabby. Now, as it pertains to catalysts, we have not much really going on. Pre-market today, we did have jobless claims that came in a slight beat, so 226 or 22,600, no. 226,000 were expected, and 217 is what we hit, so we had a little bit of beat on the jobless claims, and then that was about it. Now, later today, we only have PMI really at 945, and again, if you're looking at home sales and mortgage rates, we have that at 10 o'clock, so be mindful of that. If you've got the exposure to real estate or any building sector, you're going to want to keep an eye on that. Outside of that, for the rest of the day, pretty tame. This was just added. This was not here when I looked this morning. Trump is going to sign some executive orders today at 3, and apparently Trump is visiting the Fed at market close at 4. So I guess keep that on your radar. That was not there when I looked this morning, but it's there now. So that could be your catalyst. I was just going to say, and as I said to our members in our community, pretty dry for the rest of the week in terms of news catalysts. Like, we don't really have too much coming down the pike. You do have Intel earnings after hours, but that's about it, really. Not much else. But now you have Trump doing some stuff at close, so I guess we'll keep an eye on that in case anything comes of that. I do want to bring up a stock that I did share on this program, and that's Big C. And we talked about this one. I think there's still a video, or I think I put up a video on my channel. I said, I believe the title is, "This hated stock could go up 1,000%. I still think that. We're getting a nice little rebound here, and if you watch the program, got in somewhere around this like low 5 area. Went a little bit lower than I wanted, but I was risking this $4.73 area. Nice rebound, nice volume here. The last 2 days here on the daily is looking pretty solid heading into earnings next Thursday. The weekly is looking to reverse. Now, don't get me wrong, it's not out of the woods by any measure, but if there is any little sense of a surprise on this earnings, I really think this is a prime time where big commerce could turn things around here for the better. And more of a longer term opportunity. So if you're an investor, this is a decent base to add on. I mean, this has been building out now for about 3 months or so, 4 months or so. And you got nice volume heading into earnings, which sometimes can be a cautionary sign, but in this case, I like it based on where we're sitting on the chart. So keep an eye on Big C if that does interest you. Just wanted to give you guys a little bit of an update there because I know I did a whole video on Big C. So I wanted to at least bring you guys up to speed on that. We got 5 minutes until the market opens here. SPY is going to be sitting around this new all-time high, old all-time high, whatever you want to call it, at the 634.21 right now. Really just kind of farted around it, actually, in the pre-market. Stayed above it for the most part, with the exception of once we got past 830, dipped down a little bit, and now recovering and trying to push above it again. Qs are showing more strength than IWM, and IWM is actually showing a decent amount of weakness here, down about 0.5% here into the open, comparative to the Q's strength, which is interesting to see, especially off the back of the combined Tesla-Google earnings. So that might be a mixed bag on your tech today, so you want to watch that. As we look at our sectors, you're going to want to keep an eye on your consumer discretionary. Obviously, this is down pretty hefty because Tesla is a big proponent of the XLY. The other big proponent is Amazon, so getting a hit here isn't really shocking. So as we look through our sectors later on today, maybe take that with a grain of salt. As we use analysis on what these sectors are looking like into the open, we can draw better conclusions, understanding that this is a heavier weight mainly due to Tesla's earnings. That doesn't excuse anything, because obviously Tesla being part of the S&P in that regard is going to have some level of a weight. But the fact that it is not, the fact that the market is trying to shake it off with it being one of the largest companies is pretty nice to see. And if Tesla has any bit of a rally in its heart, which again, I will continue to say on this program over and over and over and over and over and over and over. I'm not really bullish on Tesla until it cracks 360. In fact, I'd be more bullish on Tesla if it got down to $212. That is where I'd love to long. Between 212 and around like 217, 220-ish area. That's where I'd like to long Tesla. So until it gets there, not really an uber bull in any which way. It doesn't mean I'm not bullish on their future outlook for long term. But near term, especially looking at the daily and the weekly, unless the bulls stepped on the gas through this earnings, which clearly they've fumbled here, and the opportunity was there. If the earnings blew it out of the water, they could have had a really solid reversal here. Unfortunately, that does not seem to be the case. Now, intraday, that can change, but as it sits right now, especially if we're opening south of basically 314, that's pushing you under all your EMAs, all your MAs, underneath your 0.382 retracement. You're around this 309.22 LOI. It's not a good spot to be in if you're a Tesla long if we can't recover at least like 315 today. 320 if you want to be really comfy if you're a Tesla bull. So getting under there, maybe consider hedging your risk if you're a Tesla bull here. There may be a better time for you to have a long in Tesla is all I'm saying. You do whatever you want. Just a little two words. My 2 cents. There's what I was trying to say. My 2 cents on Tesla. Now, guys, we do have about 3 minutes till the market opens, so I'd love to ask you guys twice a stream, once right now. I'll ask you one more time, and that'll be it, I promise. Do me a favor if you haven't already, please, wherever you are in the entire galaxy, like the stream, share it, subscribe, write a comment. I'll typically say hi to you in the chat. But we have, and I just want to say this, thank you guys, because we actually just hit 100 subscribers on my YouTube channel. So thank you very much. And if you don't know, once we hit 500 subscribers, this show will be a daily occurrence every single day. So if you want to see that, do me a favor, hop over to that YouTube channel, drop a subscription right now, maybe tell a friend or two. I know trading in general is a very lonely community. There's not a lot of people who trade. You may not have a lot of friends in real life who actually trade. So it's nice that we can kind of build something here and have a nice little group of people that can watch and love this show and share similar mindset and build a nice little community. So appreciate you guys for hanging out and helping grow the program. So if you like it and you want to see more, please interact in your favorite way wherever you are. I appreciate it. All right, we got 2 minutes until the market opens, so we're going to monitor this at open like we typically do and kind of see where things are going to go. And then, like I said, around 9:45, 10 o'clock, I've got 2 great names for you guys to possibly consider. That, again, I dug up from the stock market pits of hell, hated by the market, kicked dirt in its face. It's all beat up and deranged and broken, and I look at it and go, yeah, okay, this doesn't look too bad. And that's one of my favorite things to do. It's one of my favorite ways to invest, and I've got 2 really interesting names you guys are going to want to hear, so you're going to want to stick around for that. Again, we'll do that around 9:45, 10 o'clock. Let me just look around, see if anything else is happening right now in the pre-market here before we open up. AI names are a little funky but nothing like bad necessarily. It's kind of a mixed bag on all the AI names I personally invest in looking at. Some are red, some are green. So it doesn't look like that AI catalyst I was at least anticipating may have been a catalyst was much of any catalyst. One of these AI names I've been keeping an eye on, MBIS and SOUN are green though in the pre-market. So I want to see how that moves out. In fact, MBIS right now, whoops, I'm on the wrong screen. Again, a nice little push here in the pre-market. Look at that big volume on MBIS here. So I'm going to be keeping an eye on that because I have some exposure right now. That way I don't overlook that for our members in our community. Good morning, T-Burn. Hope you're having a great morning. All right, market is now opening at a new high, technically. However, we opened at a new high yesterday and sold off before we recovered, so anything can happen. So we'll see what happens at this open today, and we will go from there. Pretty cut and dry. Let me just make sure I'm going to just set a limit order real quick, guys, just because I do have an open position I want to make sure I'm taken care of here. Okay, that is still set. Good. Okay, cool. All good. All right, market's pumping here at the open. The Qs are showing some strength as well. And like I said, IWM was showing weakness. So we want to see if we can recover this 225.72 area. And again, once we get over this area, there is about a $2 upside there if the IWM can break over that. However, not looking great here right out the gate. Zoom around a bit. I guess I can remove Big C off here. I just want to talk about it real quick. Volatility pretty flat here into the open. Nvidia up near its all-time high. Do we make a new one? Nope, pretty close, about $2 off, but looking like a decent recovery here for Nvidia. Wouldn't shock me if you started pushing again next week on Nvidia. We got earnings coming up for them on the 27th of August, so a little ways away. Decent little recovery here on Microsoft. If Microsoft can't recover, you're going to watch basically whole numbers here. 510 and 505 on Microsoft intraday. Keep an eye on that. Google, nice push up here, trading 196.20 at the moment. Apple, pretty flat. It's making this nice little flat top, or looking like a flat top breakout higher lows here, kind of grinding up right into earnings. So that's interesting. This is definitely setting up, and this is going to be the most furu thing I say. It's going to go one way or the other. That's what we're setting up for here, clearly. This is powder keggy, especially with how long we've just kind of been bouncing around here. This is very powder keggy on Apple. Maybe a strangle in here, possibly, depending on how options look. So you might want to keep an eye on that if that's something that interests you. Ooh, Tesla getting crucified. 304 right now. Let's look at the 1 minute. Woof. Opened up around 310, lost $7 real quick, and it looks like bears are going to pile onto this one. Watch 300, obviously, for that psychological level. You may see some sort of a bounce there if the bulls can step up on Tesla, perhaps. Amazon, again, I'm surprised Amazon's holding up as well as it is with Bezos selling legit billions. Legitimately selling billions and still holding up. But, to be fair, they always like to say insiders buy for one reason, they sell for another. Well, I lied. Insiders buy for one reason, they sell for 50, right? They buy because they think something's going to appreciate. They sell because whatever reason. They want more money, they're going to buy a house, whatever. So anytime you see insiders buy, treat it a little differently than insiders selling. Yeah, I'm not touching Tesla with a 10-foot pole. I don't care, long or short. Woof. And like I told you guys, if it's under, like if you're a Tesla bull and this doesn't recover 315 by the end of the day, you may want to consider greener pastures, at least in the near term. So do with that information what you will. I know a lot of you watching probably are a bull on Tesla in one way or the other. Like I said, I'm not trying to poo-poo on the long-term aspects of Tesla by any means. It's just something to at least be mindful of here in the near term, that you might actually have a better entry later on if you're patient. Just saying. NBIS got a pop at the open, a quick rejection. See if it gets some level of recovery. Soundhound here trying to push up a little bit in the open, which is good to see. And we want to keep an eye on this 225.72 area on IWM. That's where I would expect the bulls to try to step in here on the Russell, which again, as I'm using as my sentiment driver essentially for where the strength will be in the market, or where, again, that gasoline-soaked wood can be thrown onto the bonfire that is the stock market and has been the rip-roaring inferno of the stock market. This is all I need to continue over that 22332 area on IWM. This is what I need to continue to push to get me to my S&P price target, or at least my SPY price target, technically, of 700 before end of the year. Volatility slowly moving down here, which is a good sign if you want to be long today. VVIX is down pretty good at an 88 VVIX, so that's showing us that the volatility of volatility is compressing. So the odds that volatility will expand or essentially reverse course are getting really, really low, which is great if you're a bull in general. Remember, volatility doesn't necessarily have a one-to-one agreement, but volatility, VIX, gets its value from the spread of those SPX contracts. So if that spread gets tighter and tighter and tighter and tighter, that makes it a lot easier to trade, especially if you're trading options. That also gives you, or should give you, more confidence in your purchasing decisions when it comes to buying options in general, because that the bid and the ask side are getting closer and closer together. There's less disagreement on where we're going. So especially if the daily is looking like this on SPY, should be a pretty good thing, all things considered. So as long as that VVIX stays, basically anytime this VVIX is sub 100, it's pretty solid for the bulls, but if it's sub 90, it's even better. You can see here, actually, the VVIX doesn't really go typically, and this is a monthly chart here. Well, like I said, lower than 90 is pretty uncommon. And you had this period here in 2022s and 23 where it got below there and wicked back up, but it's very uncommon. It really gets under that lower 90 area, so it's nice to see the VVIX now at around that 88. area and continuing to move lower and lower. I mentioned this morning in our community, how I don't really like how the market, and by saying the market I mean SPY, has been trading recently. And I've taken a live trade on this program with SPY when we're either timing the bottom or timing the top, because that's where I really think the opportunity lies. But outside of that, the market's been, how do I say this? Been feeling choppy. It's not necessarily choppy in terms of price action, but it feels very summer. And what I mean by that is, it feels like there's less participation, and it doesn't feel like there's as much volatility, but in the sense of volatility moving like more follow through on moves in either direction. It seems just very, the word I like to use is plodding, where it just kind of goes slowly, chugging along, either which way, right? It doesn't really matter, but it just makes it very choppy and boring in my opinion. So it's not something that I really have much of a, I'm not really too interested in trading the market unless, again, I'm looking at a key level where I'm at the lows or at the highs, or I'm looking to long or short. But other than that, it's been very boring. And I try to make it interesting on this program. We watch paint dry all the time here, but I try to make it as exciting and exhilarating as I can when we're looking at red and green lines going nowhere. But there's times where I can only do so much, and that's kind of where we're sitting at the market, unfortunately, lately. So this looks like a lot of the juice is really in more of the overnight session, which isn't really uncommon. Most stocks make their biggest moves in the overnight session. I mean, like, even look at this open. What's our range? So far, our range is roughly, quick math, like 70 cents. And we've been open for 7 minutes. That's a pretty tight range, all things considered. So the days of aggressively trading the market, at least in the summertime, for this OPEX may be past us, and you may have better opportunity trading individual names like SoundHound, which is pushing up here on solid volume right now at 1243. Oh, the bulls save SoundHound by the skin of their tinny teeth. What is it? The skin of their chin, whatever the phrase is. Very, very, very close. About 2 days ago, was not looking too great, and yesterday it stepped in pretty aggressively. Which is what you want to see, obviously, if you're a bull on SoundHound, trying to bounce back there in some realm of getting some bullishness here. Look at this 1265 level today. If we break over that, you're more than likely going to get in this conversation of the low 13s again right into earnings, which you're going to set up for a pretty tight powder keg there. Area of obvious resistance here. If that pops, you're going. Pretty confident on that. Nvidia is now only $1 away from a new all-time high. So it looks like tech is lifting the ship here just a little bit. Microsoft actually not following that trend. Got a pop off the open, got all the way to that 510 area. It's a little bit more than I said. I said 510 to 505 is what the levels you want to watch today. Like those whole number levels on Microsoft right now seem to be very important. Hit 510.50, wicked it quickly, came back down, now trading 507.94. Google selling off their earnings rally thus far. Still green, but selling off some of what they made thus far. Apple got a nice, this is 5-minute candles, by the way, so if this looks dramatic, it's a 5-minute candle. Apple got a nice little pump off the open, but now basically sitting flat on the day. And Tesla still grinding lower. Low a day on Tesla 301. Like I said, that 300, that psychological level breaks. It's probably not going to be good. I know it seems tempting, especially with it being down $30, but they're on the daily chart. This can fall pretty substantially if the bears pile in. The dailies doesn't look great. The weekly doesn't look great by any measure. The monthly's not fantastic at this point, especially if this candle closes like this, or red. If this monthly candle closes red, really wouldn't shock me to get to the low 200s. Again, I'd love to buy between 212 to 220, 230-ish at the earliest. What's the POC here? Yeah, look at that. Monthly POC, 226.33. That would be, so that the highest, and like 217, 212-ish at the lowest would be my prime entry on equity on Tesla. Otherwise, I'm not touching this thing, because the risk to reward is not going to be that good, in my opinion. It's going to be a crapshoot, to be honest with you. Ooh, Amazon just pushed 230. Look at that. The market says, Jeff, we don't care that you're selling all your shares. We're going to buy them, and we're going to the moon. That's what Amazon bulls are saying right now, up about 1% on the day. SPY is flat, though, all things considered, so that that Tesla right now is quite the albatross around SPY's neck at the moment, sitting around that yesterday's all-time high, 634.21. Q's showing more bearishness here, and IWM, it's trying to turn it around. Our small caps are trying. If we break this 225.72 and maybe watch the 200 MA here, just as a little bit of an extension for confirmation, 225.85 right now, getting over that with some level of volume and confirmation should push us at least $2 higher on the IWM today. That's today. So there's good bull opportunity here if there's volume and if there's follow through, right? Everything is opportunity, but we need to see the follow through actually happen. If there's no follow through, there's no opportunity. It's that simple. Let's take a look at our sectors now. Now that we're open for a bit, we got about 11 minutes under our belt here. And interestingly, tech is green, so I guess that's really carried by NVIDIA right now near all-time highs, but that was a little shocking just seeing that out the gate. We got our defensive sectors all red, so interesting. Utilities down 0.26, energy down 0.6, and consumer staples down about 0.2%. Tech currently green at 0.14. And if you guys ever wonder why I'm saying this out loud, I know some of you are listening to me in your pocket and you're not necessarily watching the video, so I enunciate that way. And you're trading, you're doing whatever, so I say it out loud. That way it can kind of speed up things for you. Real estate's pretty flat on the day. Materials down bad, almost a full percent, down 0.91. Low a day was 91 on materials on the XLB, currently in 91.42, so there's a lot of weakness there in materials. Industrials are pretty flat. Healthcare is pretty flat. In fact, pushed green at the open, so see if XLV can turn things around here in the near term. And as I've been saying, XLF, so your financial, your bank sector, this is where I see a lot of opportunity here, especially as we get near this 53.27, currently trading at 53.13. Breaking that level could push us here pretty solid here on the banks. It's looking like the banks are setting up for a vicious rally, in my opinion. And vicious, just so you know, vicious on the XLF can mean 50 cents. 50 cents a dollar can be vicious with these with these ETFs. So just be mindful of that. And then obviously consumer discretionary eating a big bag of loser O's for breakfast. Down 1.3%, but obviously a lot of that is attributed to Tesla being down almost 10% on the day. Comm services up about 0.6, so very mixed bag here. Not a lot of green, to be honest with you, and not a lot of, I mean, we're seeing some semblance of an attempt at a turnaround. So even if the things that gap down or things that move down are starting to try to grind up here, but nothing where I would be too overtly bullish or bearish out of the gate here. With that being said, SPY did just recover that all-time high from yesterday. He's trying to push here. If you want to draw a quick trend line, you probably got a little bit of a downtrend here. See if SPY can break it literally right now. Qs are a little bit more aggressive here on the day in general, so we'll keep an eye on that. And your IWM is still sitting pretty flat. Where's my VIX at? Did we update yet? Yes, we have a 15 VIX, 1504 low a day on the VIX. We are at the lowest point in, how long has it been? It's been +1 if you get the reference. It's been about 5 months. So this is the lowest point that the VIX has hit in about 5 months. So pretty nice to see. And what I like most about it is that our VVIX is at 88. So this is very indicative of volatility wanting to decay even more, which is great if you're a bull or a trader in general. However, this can also be part of the reason why we're seeing that like plotting price action that I alluded to on SPY, seeing like very tight range, not really like too volatile in the sense of moving a big range. So like I said, we've got what, probably more now, but 90 cents on the day on the range, and this is at open. So not much going on in general, but that's kind of indicative of what we see when we get a lower volatility, and especially a lower VVIX, because there's a lower probability of the VIX expanding again. So as volatility continues to move and decay, we see price consolidate. I want to say price movements tend to be a little tighter, which isn't, again, a bad thing, because then you just end up with this kind of chart on the SPY where it just goes and just kind of grinds up. I mentioned yesterday in our community that what now is a great time for is very passive swings. It's a great time to open a long and just let it do its thing. Wait overnight, as long as you're obviously managing the trade. It's a good time to be exposed in stocks that you think are going to perform very well, that have good setups. and show good promise as the market kind of grinds. You just have that low prevailing wind at your back. Mainly the other reason why I'm so focused on the Russell right now, because again, being the gasoline soaked drywood that it is, shows the most promise, especially if it can get over this 229.42. If it gets over that 229.42, it's going to go BNNANAS, as a famous singer once said, all the way to 242.39. That's a big push. That's $10 on the IWM. That's a 5% move. So there's a lot of room left here on IWM if it can crack out of this area. And that's why, again, part of my thesis, if you haven't watched it already, there's a video on my channel recorded of SPY to 700. Go check that out. And part of my thesis is there as well, so that way you understand what I'm looking at. Outside of that, though, it is being a pretty tame day. Some volatility here in the Mag 6, but nothing too crazy. Man, Amazon's just pushing. Up almost 2% on the day. It's like all of the consumer discretionary bears are they're selling all their Tesla and they're going into Amazon right now. If that, could be a part of what we're seeing, specifically in consumer discretionary. SPY just made a new all-time high, and a new high in the day, obviously. 634.93. Essentially, though, kind of a double top here. So you're going to want to see some volume come through and push this a little harder here if you're a bull on the day. For confirmation, you can use this pre-market high, so 635.02. So if you want to be a little bit more patient, give it another 10 cents, and we're there. We just tapped the pre-market high. So this is where you can expect some bulls to step in or bears to aggressively try to short it, but I would not short this by any means. I would sit on the sidelines if you're a bear wanting to be a bear. That's a decent candle here. Watch IWM. Remember, we're looking at this 225.72, and again, that 50 MA, the 200 MA as a confirmation. Breaking over these two levels, you're more than likely going to get a nice $2 rally on the small caps, on your Russell, on IWM today. So that could be very, very nice if you have small cap, medium cap exposure. And again, from a sentiment point of view, that can be great as well. So definitely don't sleep on that at the moment. There it is. There's a break. Here we go, tapping the 200. SPY just melting right now. Qs are at the highs here. And Qs are actually near their all-time high. They can make a new all-time high right now. All-time high on the Qs was 566.06. Currently at 56576, so about 30 cents off of that right now. A little bit more juice here. We could have all three indexes pushing at the same time, which is my favorite kind of day. Volatility down, IWM, Qs, and SPY all up, and that is the best kind of day to trade. I love those days when everything is aligned perfectly. Volatility decays, the market goes up. Easiest days to trade. Even if you don't even make a trade, you're more than likely just making money doing nothing. Honestly, those are the best days. So far, IWM did reject that 200 MA on the 1 minute here. Like I said, you need that for confirmation. Wouldn't shock me to back test this, let the 8 EMA catch up, bounce around here, then go boop. That would be ideal. VIX at a 518. VVIX still at an 88. UVXY is near low a day, so it looks like everything's pointing in the same direction so far. Google backtesting that 0.786 retracement here, and it has been since the open. Apple's pretty flat. Tesla bulls are trying to keep it north of 300, so good for them. And do they have news? This is a hard push for Amazon. New Kindle Colorsoft 16. Who cares? I'm not seeing any news, or news that would at least catch my eye. Up 2%, $5 on the day. This is a nice candle on Amazon. Unless my speculation of all the Tesla all the Tesla bulls or consumer discretionary bulls are going, Tesla's scary, go into Amazon. It's possible. They can see sector rotation as well. Rotating to another big name in the same sector. It's happened before. Will happen again. All right, we basically have a double top here on the Qs. More strength out of the SPY. Conversely, watch it back test the 8 EMA for a bounce and go. Not a great move there on IWM. Decent rejection here. I'm hoping IWM isn't the weak. It doesn't hold to be the weakness for the rest of the day. Because again, as you guys know, I've said ad nauseum, that is where I think the most opportunity in the market is here, comparative to the NASDAQ. Not that the NASDAQ is a bad opportunity, but there's more opportunity on the Qs, at least in my opinion. NVIDIA coming back down. Did it make a new all-time high? Nope, got pretty close. Selling off from that high a day. Microsoft can go to hell. As you guys know, I'm short, so I'm waiting for Microsoft to get into the doldrums of despair and get south of 500. Google selling off. All right, so we're seeing a little bit of tech weakness come here across the board. Seeing NVIDIA coming down. You're seeing Microsoft consolidating. And you're seeing Google still continuing to sell off their ER. Apple now moving south, so we could see, and Tesla moving up. We could see some of our mag names getting a little bit of weak here. Amazon just pushing so far out the gate. Really trying to be Atlas and hold the market up on its shoulders today is Amazon. I think we might roll into our dumpster dive segment here sooner than later. Because we're not seeing like too much going on. And that's the best time I like to do a segment, when it's not too crazy here on the market. And then we can come back and kind of pick the pieces and kind of go from there. What do you guys think? One's in the chat, you want to get to the dumpster dive. Or drop a 2 in the chat if you want me to hunt around for a day trade. Still can hunt around for a day trade. I'm not saying I won't take one later. But what do you think? And you can only pick one. No 12s or 21s in the chat. It's a 1 or a 2. You want to move to the dumpster dive now, and I'll show you 2 undervalued stocks, or do you want me to consider and look around for a day trade? The choice is yours. Let me know in the chat. 1's for the dumpster, 2's for the day trade. There can only be one. You can only pick one. Let's see what you guys would prefer. IWM nearing the lows with the exclusion of that wick there down to 225.03. Q's at the 200 here. Not really, like, it's just so tight. SPY looking like it could get a nice little bump and go here. Hatchet says 2. Hatchet wants me to take a day trade. Like I said, if the opportunity is there, we can hunt for one. Be honest with you, a lot of these opportunities suck eggs. It's not looking too fruitful. And I don't like taking longs on the market on days like today because it's so tight. Unless I'm like, especially on a 0, I bet you this IV is super low. Should be super low. Yeah, IV's at 13, so IV is very low on the SPY right now. IV percentile, just so you guys know, is 17. So conversely, it's what, 20-30% lower. T-Burn says 2 dumpster dive. Now I'm confused. I thought I said 1 was the dumpster dive and 2 was the day trade. Now I'm confused. I'm pretty sure I said 1 was the dumpster dive and 2 was a day trade. That's some reverse psychology stuff. Here, you know what I'll do for you guys, I'll look around right now real quick and see if there is a good opportunity. Look at some recently viewed names I have here. We'll see if there is any opportunity. Just from a quick overview. I mentioned on this program, if you like Krispy Kreme, around $4.20 is where I'd consider an entry. Which I guess since I've been live, I missed that opportunity because we opened south of that. We actually wicked it, and now looking like we're pushing here. I haven't touched it. I don't have a long. I don't really want a long, but if I were to take a long, it would have been at 420. Blaze it. Viking, if you're long, Viking had a whatever earnings. I think people were expecting data and didn't get it, and you're not going to get data because I don't think in the history of Viking Therapeutics they've ever announced data on their earnings. I don't think phase data on any of their earnings, so I think some retail traders were a little disappointed in that. Now only marginally down about 2%, so nothing too crazy there. I'm just zooming around some of the stuff I recently have looked at. Red Robin coming down to that 705 area, back testing that old high and trying to rally off of it. You saw that 751 area was really important yesterday. Got a nice push up to 789, so we'll see if we can get above that 751 again. I was going to trade options on this name. It's just the liquidity's so low. Like, look at the open interest here. These are for the calls that expire in 22 days. Not a lot going on here. So, I mean, there's way more bulls than bears comparatively. You got 24 people buying the 7.5 puts and about 1,000 people holding calls on the other side of the chain. So there's way more bulls than bears. It's just, it's not really fun getting into options contracts you can't get out of. For every buyer, there needs to be a seller. Microsoft's is getting very wound up here on the day. Walmart. Watch 96.65. That's a key area I've been watching on Walmart. If it gets over this, you could actually consider a day trade. So I'll actually add this to our show today because it's possible it could get through there. Now that's kind of a big move on Walmart, but if I can break over that, then I might even consider a swing. Being north of this 96.65 puts 100 and 100 plus into the conversation, especially leading up into earnings. Wouldn't shock me. You've been making higher lows. You have this low here on 515, another low around here on 611, and then another low here on 711. Making higher lows each and every time. It's a good sign. And conversely, the highs haven't really been higher highs or lower highs. They've been pretty flat, just shy of that key 100 area. So I think that's what we're waiting here for, and getting over that 96.65 could lead you, at least for even a pre-ER rally, which because their ER is on August 21st, could lead you at least $100. So even on a day trade, getting north of that 96.65, you got about $3-4 there. Not saying that would happen the same day, but I should have said on a short swing trade. You could get some juice out of that. So that's something you want to keep an eye on if you have interest in Walmart. Rivian's another name that I've been watching very closely. Now, I do have exposure in Rivian via some longs through different means on options. No equity on Rivian at this point in time. It's interesting for sure. I don't hate it, and getting over basically 14.14 is such an important level for this stock, and you can see the last 2 days reject underneath that. Popping this, you get to 15.18 real quick, and you're going to get back to this high, the 17.15. I've got an LOI here at 17.01. This is going to happen pretty quick. So if you like Rivian, hopefully that's good news for you. And if you hate Rivian, maybe reconsider. I think this is a decent chart if you're patient. Not really seeing much in the realm of day trades. Like nothing's really like ooh, that looks great, let's get it now. I'll keep Walmart up here because, like I said, that could offer some decent opportunity. SPY's just kind of farting around. Qs are farting around. IWM push the lows, essentially, I call something like this a double bottom. I know it's not exactly a double bottom. It's off by like a few pennies here, but it's pretty close. And you're sweeping the same like liquidity. So we'll see if we can get a little bit of bounce here. Volatility's still low, all things considered. You got a VIX 15. In fact, volatility's near the low of the day. SPY's trying to rally. If anything, I would be on the bull side today. I wouldn't be on the bear side, to be fair. I wouldn't lean bearish today. I would lean more bullish than bearish, if anything at all. It is very mixed baggy. Days like today are very stock picker market. Like you want to find the names that you like, that you've been trading, and those are the ones you want to look for, in my opinion. Because I don't think you're going to get a ton of juice out of trading unless you're doing something defensive. Like, you know what I'll do for you guys? Here, we'll do this. You know what I like? I'll take a bull spread on SPY. Let me check one more thing before I do that. So this one's going to be pretty dry and boring, more than likely. Just so you're aware. But the risk to reward should be pretty solid. So I'm going to take a spread on SPY. IV's pretty low. So here's what I have to decide. I'm going to take a 0 DT spread on SPY, and I'm debating if I want to take a credit spread or a debit spread. So a debit spread would take advantage of an IV increase, while a credit spread would take advantage of an IV decrease. Now, I don't anticipate IV to drop more because IV is already low. So theoretically, I want to play for an IV increase, which would mean I'd want to have some level of a debit spread. So in this case, I want to consider a call debit spread. However, if I'm considering a call debit spread, I want to structure it in a sense where theta is going to be on my side. So for me personally, especially with how it's sitting, I want to choose either in the money or at the money for this particular strategy, because I want, again, theta to, for the most part, be on my side. What I want to look for in this case, I will probably look for a 634, 635 call debit spread. However, I would prefer an entry around here, like 634, 50-ish. And I would look for a premium of about 50 cents. Or I'll go one strike even deeper, because that way I could play the time decay in my favor. So let's look and see what those are valued at right now. Currently, the SPY is trading around 635. The 634, 635 spread is currently trading around 68 cents. Bid 66, ask 68. The 635, 636 is trading at a little bit better, about a 50 cent spread, 48 cent spread. So that's about a 1-to-1 risk, right? If the spread's $1 big or $1 long, wide, whatever. Yeah, wide. If I get a 50 cent entry, the most I can make is 50 cents, the most I can lose is 50 cents. So my risk reward's pretty cut and dry. Now I could, if I wanted to be riskier, go out the money, and those spreads are right next. One strike out the money is about 30 cents, which means I have a 2-to-1 risk to reward essentially, where time is actually going to be against me in this scenario because I'm going to consider a debit spread, and I'd have to get there sooner than later. So I don't really want to do that in this scenario. So ideally, I want to look around mid 634s for an entry here, basically around where we rejected the open, rejected again here around the open at 635, and now building like kind of like a support around here in like the 634.70 area. So we can get one more little baby sweep down here and then see if we could build a base. That's where I want to open up that opportunity. And again, this would be on a 0 day, so you could open this obviously on a 1 DTE. However, I actually want the time decay in my favor because I'm betting in this scenario that the market's just going to slowly grind up, at least for a chunk of the day. So it's kind of what I'm looking for here and what the strategy is here. But I do want to enter that sooner than later because I want, again, that decay in my favor. And if I miss the entry, it's not going to be it's not any use to me on a 0 DTE. Sorry, I'm just pre-typing this out for the members in our Discord. It's going to be a debit. Cool. Because I'm anticipating a rejection here. Unless it stays here for another minute or two, I'm anticipating a rejection coming down to, again, 634, north of 634.5. It's getting south of like 634.80. Not really much here, like 20 cents. I'm not really looking for much. Basically, where this wick was here on the previous 1 minute candle, getting a little lower than that. So I'm thinking on the 5 minute, we're going to sit in that spot for a little bit before pushing again. But if I can get a good entry on these, then I might get in a little early. Let's see. So again, I'm watching the 635, 636. So the long 635, the short the 636. Now the downside, so my break even for that if I get filled right here would be 635.47 by the end of the day. So as long as I anticipate the SPY to be over that price, so basically make a new all-time high, then I'd make money. Long story short. I could be more defensive and go, again, more in the money, which would give me a little bit more cushion. Actually, I might do that. Yeah, I'm going to do that, actually. I'm going to go one more strike in the money. So I'm going to look at the long 634, 635s. Because that's going to give me a little bit more cushion. I'll take a stab now, actually. All right, let's see if I can get filled. All right, not filled yet. I put a limit order in at 0.65 on that. There's the fill. All right, so I'm now long the 634 calls and short the 635 calls for a 65-cent debit. What was it? 634, 635, 0.65 debit. So I'll explain this trade for some of you that, because I know some of you have asked on the program before, you've had an interest in trading spreads. So this is called a call debit spread, and essentially the point of this spread is basically it's like it's not a covered call position, but it kind of is, in the sense I'm betting in this scenario because I bought a 634 call. I bought a 634 call and I sold a 635 call. So what that means is I'm long the 634, I'm short the 635. Since I have a 65-cent debit, that means my break even on this trade, if I wait all the way to the end of the day, is 634.65. Meaning, if it's anything north of 634.65, I make money. The max amount of money I can make is if SPY closes over 635. If SPY closes over 635, then I make $1 on this trade. So if I have a 65-cent debit, I make 35 cents. So my risk reward is a little upside down here. But again, I'm playing the time in my favor, and I'm playing IV in my favor here. So, and the most I could lose here in this case is 65 cents per strategy. And that's if the strategy sinks under 634 by the end of the day. So basically, to make max profit, I'm already there. So if SPY closes here right now at 635.18, at the end of the day, this spread will expire for maximum profit, $1 each. So I'll make $35 per each spread. So it's a decent risk reward based on how I've structured it. Trades like this, I typically would close out when it hits north of 90 cents, 85, 90 cents, depending on what the chart looks like and what the time of the day is. Because of the fact that once you get near 90 cents, 95 cents, when we know the spread's a total of $1, I can only make $5 more. I can only make, however much more money. And anything can happen at any point in time, especially with a 0 day. So I don't want to get too crazy with it and say, oh, yeah, I'm going to hold to the end of the day so I can make my extra $5. I don't care about $5. All right? I made the meat of the trade. I made my money. I'll walk. Because what if Trump tweets something at 2 o'clock and I was sitting on almost 100% trade and almost got max profit on the trade, and just because I want $5 more and I get screwed because Trump tweets something or whatever, the market drops and now I lost all of that profit and now I actually have a loss. You don't want that. So this is the time where I like to take those kinds of stabs. Basically, if we get to like 636 today, even in the next hour, time decay is going to work in my favor, so that theta is going to work for me because I'm in the money. And also, because of the delta appreciation, I'll probably hit my price target. I'll probably be at north of 85 cents, 90 cents at that point. So, I mean, as long as SPY sits over 635 today, I'm making money. Easy. The longer it sits here, the more money I make. The quicker it moves up, the quicker I can close my trade out, which is nice. But it should be a pretty easy trade. Okay, so Negum says, so you're taking favor spread for the SPY. I don't know what you mean there. I'm betting bullish on the SPY. In this case, because of how I structured the trade, I'm theoretically short theta. I'm betting that the time decay would work in my favor, not against me. Which, even though I'm not taking a credit spread, since I'm in the money, that still works in my favor. Does that make sense? Can we get the crispy without the cream? That's not a question for me, my friend. That is a question you'll have to ask someone else. That is not something I know the answer to. Nor do I even want to say that sentence out loud again. All right. Now let's get rolling here with our dumpster dive. So again, my break even on this trade, I don't really care what the SPY does. Now we're getting a sell off here, so it kind of sucks. But my break even on this trade is 634.65 by the end of the day. So as long as it's north of 634.65 by the end of the day, I make or lose no money. If it's over 635, I make full profit. If it's under 634, I can't lose any more than that. It's very, very simple. So what I wanted to ask you for, if you're taking a debit call spread for yes, correct, Negum. I'm taking a debit spread. So again, if you want to follow along at home, take notes, whatever. I am long the 634s for today, calls, and short the 635 calls. at a 65-cent debit, which if you got in right now, which was what I originally was waiting for, and I was just a little impatient, like I said, that mid like 634.80 area was where I wanted to enter, and I was just impatient, and now we tapped it. But hey, whatever. You probably got a better entry than me, so God bless. Anyway, let's roll into our dumpster dive segment. Guys, before we do that, I asked you twice a stream, you know what I'm about to say. Do me a favor, like the stream if you haven't, wherever you are in the galaxy, you're watching on YouTube, Instagram, or X. If you haven't already, take 1 second, take me out of your pocket, hit like, drop a comment, drop a follow or subscription over on YouTube. It's very helpful for me. I appreciate it very much, and I only ask you twice a stream. This is the second time and the last time I'll ask. But I appreciate both your eyes and both your ears listening to me, so thank you for tuning in. And if you want to see more of the program, make sure you go over to subscribe on YouTube, because once we hit 500 subscribers, we're going to do this program every single day. And we just hit 100 subscribers, so we are 20% of the way there. So as we grow, it'll be easier to get those subscribers as well. So, you know, your support in our trying times when I am such a small fish not only will be remembered, but will give you more of what you like if you like this program. So it's a win-win for everyone. All right, let's roll into the dumpster dive. We're going in the garbage, guys. We're going to the pits of stock market hell. And like I said, I've drug up two of these names, two of these hated names. Are they hated? Well, their stock price will reflect that they're hated. But two of these hated names from the pits of stock market hell that I'm bringing to you, because now what it was once someone's trash could be your treasure. Pull you up on the daily chart. All right, so here's what I like, what I don't like, and most importantly, where the technical levels and opportunity lies for the stock ticker NEO. Now, I'm sure this is a name a lot of you have heard of before. As you can see on the chart, it's received a lot of volume and hype recently, but this is a name that has been hated on the market for quite some time. Remember back in 2021, this thing rallied from $2 to whatever ridiculous price, and now it's sitting around that $5, $4 level. So I want to highlight a few things I like about the company, a few things I don't like about the company, and where, most importantly, that technical opportunity does lie on NEO. So a few things I like about the company: they do have a lot of strong backing from the Chinese government. So if you like that kind of exposure, they want NEO to do well. It's going to look good for their government, obviously. So they are behind NEO 100%. I also really like their technological innovation. So they do something different than Tesla and your other EV competitors, where they're doing battery swapping. So the way that they change batteries out is unproven, and that's actually one of my bear points. But it is very interesting because they're focusing on solid state batteries, which could potentially push you over the 600-mile range, which is pretty cool, because one of the biggest complaints I hear from a lot of EV drivers is the limited range that we see on a lot of these EV vehicles in general. They're also expanding into Europe and other countries. So they're in Germany, Norway, Netherlands, and some other EV markets right now, which is really nice to see, because this is a very strong Chinese brand and continues to be a Chinese brand, but getting into those other markets could offer great opportunity for growth, obviously. They do position themselves as a premium brand, which I kind of like. It's hit or miss with that one. Being a premium brand can be a great thing. They make their cars look like a premium car, which is nice. It kind of gives them more of a competitive edge over Tesla. Tesla's once kind of seen as a premium brand. I'm not saying it's not anymore, but Tesla is more focused on getting everyone a Tesla. And I think NEO, that opens the door for them to be like the BMW, the Mercedes of EVs, essentially, or at least that potential there. And lastly, they have growing deliveries, and their vehicle lineup is expanding, which is really nice. They have, obviously, as they grow more vehicles, they have different vehicles, they can approach different markets. Their delivery numbers are going to improve, and they have been, especially after we've seen some supply chain issues in the past. Those delivery numbers are improving, which is really nice to see. Now, some things I don't like about NEO: they don't make money, right? I hate companies that don't make money. This is a company that continues to operate at a net loss, despite revenue increasing, which isn't a bad thing. It's a growth company, so it's kind of, you take the good with the bad, and that's kind of what you're seeing here with NEO. So the cash burns are remaining pretty high, which means you could be at risk of dilution as a stockholder. They could look for you to raise more money, which would put you personally at risk if you're an investor in NEO, especially after a move up like this on high volume. They might look at that and go, hey, we can sell some shares for cheap, or sell fewer shares and make more money, and they may take that opportunity. You never know. The other thing, I guess the bear point is also a bull point. They depend on 90% of the Chinese market. All their sales basically come from China, which is not bad. China's a very hard market to get into, and I would argue getting out of China to go in other markets is easier than working in other markets and getting into China. So that can be a bull point, but because they rely so heavily on the Chinese market, that can be a bear point, because if there is any sort of economic slowdown in the Chinese economy, especially if they're positioned as a luxury brand, that can be bad. In general, EV competition is continuing to build. There's other Chinese brands. There's BYD, there's Li Auto, there's XPeng. They're all competing for the same market share. It's all the same kind of customer. Now, again, what makes NIO a little bit different, and what I like, and what at least my opinion of them, is that they're targeting to be more of a luxury brand, which can help them. But because of this internal competition in China, that can be something that can either hurt them if these other EV lines come out and want to be more luxury, or at least offer a luxury alternative. Or again, be a positive because the other brands are focusing on mass market and they're not necessarily doing that. So that one can kind of go either way. And outside of geopolitical risk, which is obvious with China and trade deals and whatnot, the one other bear point that I have for them is their battery swap model. While it's not bad, it's kind of inconclusive. You're basically building an infrastructure network. So think of Tesla with their superchargers. If you're building all these battery swapping stations, they're going to be expensive to build and maintain, and it hasn't been adopted yet. So people will be less likely to buy a NIO car where they can swap out their battery if there's nowhere to swap their battery out. And also, we don't know if the battery as a service model is proven, whether they're offering it or they eventually have other businesses help them provide the batteries to their customers. We don't know if that model's proven. So unless other cars eventually adapt this model, or even look at NIO and say, wow, we like your solid state technology, the batteries you have, can we license it? Which would be a huge bullish sign for NIO. It's a little bit of it's a risk. It could be good, could be bad. It's unproven. That's why I wanted to highlight it. Now, most importantly, what you're here for and what you want to know is looking at the chart. So we've had a lot of volume here. This is the daily chart. Big push up here, broke through all your EMAs and MAs, and right now rejecting this $5.10 key LOI here. Now, for me personally, where I'm looking to enter on NIO, and I am not long yet, is either on the back test of the 8 EMA or at $4.48. Willing to risk about $4.21. So for me, that's about a 5% drawdown roughly on equity. Decent risk to reward. Now, after this little daily push here, the weekly doesn't look bad either. You got your MACD turning up on higher volume, and you're breaking out of this area again, or trying to, I should say, which is a good look, because if you zoom out, it don't look great. It has been grinding down. It pops up, and every pop basically gets sent back to hell. Every single time this company on the weekly has popped over the 50 MA, within under a month, it gets back under. So you can go back and check that out if you don't believe me, but within a month, back under. So the other additional point you may want to look for, and that's why I'm keeping my risk so tight here, and again, entering on the daily around this area, watching the weekly and giving that 4-week time span, basically a month, to see if it can sustain over that level, because your 50 MA on the weekly right now is 443. So risking, again, that 421-ish area, giving me a little extra buffer in case we wick up and down. Closing above that area, basically my entry, for 4 weeks would mean I have a decent long, and we're breaking a statistically significant level, because NIO has not broken, and I'll zoom out for you on the weekly. I don't know when the last time was. Let's just go all the way back. So the last time, 2021, was the last time it could sustain over the 50 MA for a period of at least 4 weeks. So that would be a huge statistical significance for NIO. Now, not to mention that, but the upside opportunity here is pretty clean. And as you can see, all these lines on my chart, these are all profit points. These are all take profit points key levels. And these teal colors here, these are all unfilled gaps. You've got one gap here, one gap here, one gap here. You have 4 gaps to the upside, which gaps don't always fill, but they fill. They tend to always, I shouldn't say, they will fill eventually. They always tend to fill eventually. It's just when eventually is, obviously. And that's what I'm interested in here. The risk to reward here, again, you're looking at about a 5% downside with the correct entry. I'm not long yet. I'm looking either for the 8 EMA backtest here or $4.48. With that entry, risking 421, you've got about a 5% drawdown for, if you're patient, basically a pretty significant upside. My first like significant price target is probably going to be the $7.16, and at that point, if you get my entry around that like mid 4 area, you're what is that like 60-70% gain, pretty substantial. Getting north of that, like that 780 area, puts you into conversation for 9, and then very quickly, I think all these gaps, because they're so condensed there, are going to fill really, really, really quickly. If we zoom out here, let's go on the month, and you can see how heavy the volume is down here. Now, obviously, because the stock is cheaper, the volume tends to be higher because it's easier to purchase more shares for the same amount of money. Duh. But volume is pretty thin up here, and it was very, very big here at the 40. So there are people, possibly, that are still bagged and tagged here up in the 40s, and you've got decent volume gaps up here in the 30s, in the 14s. And again, this is a monthly chart. We're talking months to years out, right? So a while, long-term investment, where getting an entry around 450-ish could prove you a multi-bagger here. Even if you wanted to look at just 20, again, on a monthly time frame, looking at a $20 price target, that puts you in the conversation for about a 400% upside, 300 to 400% upside. Again, on an investment. I'm not saying this is a swing trade that happens next week, on an investment. So based on everything I've said here, I think NIO is one of those really undervalued companies. And let me preface this with, I hate Chinese companies. If any of you have known me or watched the show for a while, and I don't think I sparingly talk about Chinese companies, I hate investing in them. I think they're awful a lot of the time. But when the risk to reward makes sense, as with any trade, as with anything in general, I'm taking a risk when I put my money in something. The risk is calculated here, in my opinion, at that specific price where I have a good risk to make a significant reward if I'm patient and if the company doesn't commit financial fraud like Luckin or whatever coffee and their stock price went down like 95% in a day. That's my biggest fear with Chinese companies, that there's some sort of fraud or something. So I feel a little bit better about NIO not being like a Nikola because they actually have cars that drive on the road, right? So I feel a little bit better about it, but again, the risk reward has to make sense, and that key level to enter is going to be that mid $4 range or the backtest of the 8 EMA on the daily after this push up. So that is going to be NIO for you guys, a company that I think offers a clean risk reward upside with the proper entry. Now, the second name, because I got two names for you. First, what do we guys think about NIO? This was a meme name a little while back. I know some of you probably love it. Some of you probably hate it. Maybe you've been burnt by it before. I'll tell you one thing. For me personally, I owned NIO shares. I'll show you where I own NIO shares. I dropped the ball on this. I'll admit it. I own NIO shares. I don't know the time. It was either 2019 or 2020. At like $2. And I sold it for like $2.50. It continued to go to almost 70. Felt that one. That one wasn't fun. But hey, at least you know the opportunity's still there, right? Do we like NIO, guys? What do you think? Yes or no? Is NIO something you're interested in? Is NIO something that you'd personally take a stab at? Again, with the right entry, I think NIO could be pretty solid. And I have one more company for you guys. We're not done yet. I got one more ticker. I do want to check on Walmart real quick because we did tap that level. Essentially, like right here. I don't like, Hatchet says, I don't like shiny stocks. I think China's situation is getting worse. I don't disagree, but that's also part of what I take into the risk equation here, right? It's part of the risk equation here. It's a significant break on higher volume. Backtesting it to some degree allows that significant break to cool. Then you backtest a significant area of support and resistance. I've got 3 stacked up here, and I'm risking a 5% drawdown. My biggest concern, like I just said, is that NIO commits fraud or something one day, right? So that's my personal biggest concern. I don't want to see that happen. That would be not fun. So we'll see about that. So it's something I'm considering. It's got to get down to this price where I'm happy with it, though. So I am watching. But appreciate your input, Hatchet, as always. Everyone else can, I'm sure, are driving, working, etc. So it's okay. You don't have to chime in. You can chime in later. And I recorded it, so if you guys want to check that out, you can check that out later. But we should roll into our next company for you guys. Let me just pull up my Doohick. Let me do that. Copy that. Maybe one of these days I'll work on some nice little PowerPoints to show you guys. You guys like PowerPoints? I feel like it's better to look at the chart, but maybe we'll do a PowerPoint because I have a bunch of notes and I just fire through like bullet points just to give you guys like the most information essentially as quickly as possible, which is why I say my intro every single time. I don't want to overload you guys with information. Anyway, let's get into it. Let's get right into it. Oh, I should enter right now. Hold on. That's funny. Hold on. Because I actually might enter this right now. Stock ticker's Wendy's, by the way. W-E-N. Yep. Please hold. So now I have to technically say I have a position. I should say I opened the position literally before I started the segment. That'd be pretty funny. Wow, Viking made a full recovery? Hold on. I'm long Viking Therapeutics VKTX. And it went down on the earnings. Now it's green on the day. Hilarious. Retail got screwed on that one. Should have waited. Shouldn't have expected trial results during an earnings call. Tisk tisk. Never done that before. Anyway, Wendy's. Gonna buy a Baconator. Sorry for the dead air for a second because I'm actively purchasing shares. Okay, good. Let me put an alert for the Discord. Wait, did it execute? There we go. What the hell? Edit. Sorry, dead air.